Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Welcome to Qualcomm Pulse, where we dive into the latest trends and insights on the world of technology and finance. Today, we're talking about why Qualcomm's stock has been making waves in recent times, with a visit to Zacks, to explore some key factors that could influence its performance. So, let's start with what's going on in the market. With shares returning plus 2.8% over the past month, it seems like Qualcomm is definitely worth taking a closer look at. But how does this compare to the broader market? The Zacks S&P 500 composite has seen returns of plus 7.2% over the same period, so what's driving this difference? The answer lies in the Zacks electronics semiconductors industry, where Qualcomm belongs. This industry as a whole has gained 18.1% over the past month, which is impressive considering the broader market's performance. Now, let's talk about the key factor that Zacks prioritizes when it comes to evaluating a company's stock: earnings projections. According to Zacks, the fair value of a stock is determined by the present value of its future stream of earnings. So, what are the analysts saying about Qualcomm's earnings prospects? For the current quarter, Qualcomm is expected to post earnings of $2.69 per share, which represents a change of plus 15.5% from the year-ago quarter. But what's interesting is that the Zacks consensus estimate has actually changed minus 0.1% over the last 30 days. This could be an indication that analysts are taking a closer look at the company's business trends. Moving on to the current fiscal year, the consensus earnings estimate of $11.81 points to a change of plus 15.6% from the prior year. But again, the Zacks consensus estimate has changed minus 0.1% over the past month, which is a bit of a mixed bag. Finally, let's take a look at the next fiscal year, where the consensus earnings estimate of $12.19 indicates a change of plus 3.2% from what Qualcomm is expected to report a year ago. Over the past month, this estimate has changed minus 0.2%, which suggests that analysts are still keeping an eye on the company's growth prospects. But what does all this mean for Qualcomm's stock? Well, according to Zacks' proprietary stock rating tool, the Zacks rank, Qualcomm is currently sitting at a 3-hold rank. This means that while the company's earnings projections are looking strong, its stock performance may not be as exciting in the near term. So, what else can we learn about Qualcomm? Let's take a look at some of its key metrics, like revenue growth and valuation multiples. According to Zacks, Qualcomm reported revenues of $10.84 billion in the last reported quarter, representing a year-over-year change of plus 15.4%. This is impressive, especially considering the broader market's performance. Now, let's compare Qualcomm's valuation multiples to those of its peers. According to Zacks' value style score system, Qualcomm is currently trading at a discount to its peers on several key metrics, including price to earnings, PE, price to sales, PS, and price to cash flow, PCF. This suggests that the company's stock may be undervalued relative to its peers. So, what does this all mean for Qualcomm investors? Well, while the company's earnings projections are looking strong, its stock performance may not be as exciting in the near term. However, with a Zacks rank 3-hold and a discount valuation relative to peers, there is definitely potential for growth down the line. That's it for today's episode of Qualcomm Pulse. We'll keep you updated on all the latest developments in the world of technology and finance. Thanks for tuning in.